So how does this work now? People have found out that the best solutions is, and it took us years to find this out, but people have found out that the best solution is to not tokenize a car directly. But first, you have to create a SPV entity. That means special purpose vehicle, like a small legal entity with a CEO. And the only purpose of this small legal entity is to own a car and then issue shares. Yeah, like a very small shell company where you plug in the car. And then out of this SPV company, you can get equity tokens or you can get debt tokens or any mixture. But you have to have the SPV company. Otherwise, you cannot file for a security prospectus, and then you don't have the permission to do marketing for it. That's basically the reason for the license.
Do you have to do this process also if you just want to tokenize the assets so that only one person can buy it? Because actually you don't need the shares if only one person acquires.
Yeah, I come to this in a second. Both questions I will handle jointly. So let's make some examples. In my personal opinion, the holy grail of this entire business is marked in bold here. It means ideally you use real assets. I will tell you in a second why. Then ideally you use equity tokens. I will tell you why. Then ideally you need a security prospectus with EU pass reporting. The reason is pretty clear because otherwise you don't have the allowance to do marketing for it. You need to do sales. Then doing compliant investor onboarding, that's pretty clear. And ideally, you create a trading venue such that people can trade with it. And now, what am I meaning here exactly? I think it's very important to not just issue tokens, but to also offer to the investor the possibility to put the tokens back into the system and withdraw cash, right? The investor not just wants to invest, he also wants to divest. Yeah, he wants to sell his tokens again. And part of these early token projects, which we have seen in the last couple of years, you know, that have been startups and they have done a brilliant job, but they have mastered the issuance process, but then they didn't have the resources and the knowledge and the resources for lawyers and so on to also get the licenses for a trading venue. So they allowed people to invest, but people can't get their money out again. That's the opposite of a liquid market. And that's why some of the tokenization platforms failed. And now, why real assets on the left-hand side? Because with real assets, you can estimate a price. Yeah, for example, in case you have this building on the other side of the street, you know quite roughly what the value of this building is. You know, plus minus 10%. You can estimate it. Same with classic cars. You can also estimate roughly a price for classic cars. You know, roughly. But it's not possible for startups, for example. Tokenizing startups is not possible because there is a startup and I say it's 5 million valuable and you tell me, no, it's 10,000 valuable. So we will not reach a consensus on the price. And without price discovery, you can't create a liquid market because for a liquid market, you have to have a rough price estimation, which is kind of solid. And only then you can engage a market maker such that the price is not just fixed, but people can also trade the price. Therefore, you have to have rough estimations for prices. That's why I think once a company is doing real assets in combination with equity tokens, not debt tokens, in combination with all the other points, then it could work. And this has not come up yet. Equity tokens, why equity tokens? Because we have an inflation of 10%. Who the hell wants debt tokens? You are investing money with a yield of 5%. Inflation is 10%, so you are investing at risk and you're losing 5%. Who wants to do this? Institutionals and pension funds, they have to do it. It's not that they want to do it, but they have to do it. But we as individuals, we would not invest in debt at this point of time. That doesn't make sense, right? Not now, maybe in the future. That's why I think equity tokens are very important. And unfortunately, according to German law, we cannot have equity tokens here in Germany because only debt tokens are possible as of now. Yeah, so the route towards tokenization like this is blocked, at least for German only startups. It's just not possible. Switzerland is a couple of years ahead. In Switzerland, you can tokenize basically everything, including equity. You see this also happening. Companies are called Aktionariat, for example, and Daura. They are doing exactly this, and it works, right? But the Swiss market is, financially speaking, quite large, but it's disintegrated with the European Union. Therefore, this doesn't really spill over to the EU. And once you have this, equity tokens, real assets, security prospectus, onboarding, and a trading place which is liquid 24/7, then it starts making sense. And now we see, since a couple of months, we see the first companies doing this. I explain this to you in a second. So Finexity, for example, is a version 1 tokenization engine, I would say. So what are they doing? They're doing real estate, debt tokens with prospectus, and they don't have like a full-fledged trading venue with 24/7 liquidity, but at least you can trade it to some degree, which is okay, right? But did it take up at scale? No, because I think the reason is that it's debt tokens, right? Retail investors in inflation times, they would not purchase debt tokens.
So what's the reason for not having equity tokens right now? Like, what's the rationale behind it?
That's the law, full stop.
That just didn't happen until.
Exactly. Yeah, the law, the law is changing. Yeah, maybe it sounds kind of strange, but the law is changing quite rapidly in Germany with regard to this blockchain stuff, even though it takes years. And what the lawmaker in Germany did is something which is extremely brave, because in Germany you have in the law something which is a thing. You know, this one, that's a thing in Germany, Sache, and there is a huge law body around how to handle these things. And now with tokens you have things which are not touchable anymore. So the question is now, can things which are not tokens, which you cannot touch, can they be things according to German law and or not? And the lawmaker now, and this has been very brave, you know, because there could have been lots of damage in the law systematic. They now artificially decided that tokens which are not touchable not physical by design, that they are treated like physical things. And for those dogmatic law professors in Germany who are caring about the systematic and so on, for them this is very, very, very dangerous to accept. Yeah? And therefore the Ministry of Finance started slowly. And the slowest way of starting is allowing debt tokens, in Germany we call it Schuldverschreibung, debt tokens to be tokenized, because you can handle this in these law frameworks. But once you have shares, then you also have to have control rights, ownership rights, reporting rights. Everything is bound to these ownership rights, and that's basically something where the lawmaker had a huge respect, and therefore the lawmaker has it on the agenda, on the roadmap, but hasn't executed it yet. Right now, in these days, there are discussions going on in Berlin how to now move from debt tokens to equity tokens, and how to make the roadmap and when to realize this and so on. We can expect the law maybe to come next year. Yeah, so this will all happen, but it just takes years.
If you just want to do a capital increase, it's still not possible. So it's not just like equity crowdfunding, like ICOs, but also capital increases. Like no tokenization of equity at all.
In Switzerland? So in Germany or in Switzerland?
No, in Germany, because I didn't know that. Yeah, in Switzerland it's pretty common.
Yeah, it is. You know, Germany is with regard to equity held in terms of share companies and so on. It's horribly complex, and you always have to go to the notary. That's a very good question. Why do you need blockchain at all in this entire game? Why do you need it? Have you asked this yourself? Why do you need it? There is exactly one reason.
Trust.
That's an above all term, which is always nice, and you're right. But you know, on the lower level of operations, there is one key argument here why blockchain makes sense.
You can eliminate notary.
Yes, that's the key point. With blockchain tokens, you can allow ownership transfers from me to you without having to visit a notary. In Germany, in case I want to give you 10% of my GmbH, legal entity company, we first have to bargain a contract, that's normal. Then we have to go to the notary jointly. And in case one person doesn't want to, then there some kind of proxy documents to be filled out. The notary has not always time. We have to go there physically, right? Then we have to pay an invoice. We have to send letters to the commercial register. So it's an endless process for one single share change. But this is how the system has been built. Yeah, let's take it as it is.
So with real estate, with everything.
Genau, with real estate also. And now tokenization would now use the blockchain technology as register for shares, for example. And this would then lead to the situation that you can remove paper documents and paper processes here and there. And if you do the construction right, then you can move to a world where ownership changes of share companies are possible without a notary meeting. And why is this important? Because the process with a notary takes you 1 month, and the process without a notary, how long does it take you? 1 millisecond. And then you can make trading places, trading venues, you can have all kind of liquidity stuff going on, and then it really makes sense. Yeah, so that's the key point here, right? But in Germany, it will take quite I will show you an example how it still can be done. But in Germany, it's really difficult to do it. So this combination here worked, but it was not optimal because of the debt tokens. That's, for example, Finexity, which launched in 2021 or maybe even earlier. Then we had another company which has a valuation of a couple of dozens of millions. It's called Timeless. In Berlin, you might have heard of. What have they doing? For example, they are tokenizing art, but not with debt tokens or equity tokens, but with ownership rights. The problem with ownership rights is that you, by definition, can't get a security prospectus on it. That means you will not have the allowance to really do sales with it. You can only do limited sales with it. And what happens then? It doesn't scale on a commercial level. So that's why Timeless is very, very, very nice for collectibles and small goods, but for like the future capital market, it's not sufficient. But maybe they evolve. And because you don't have a security prospectus granted here, then you cannot by design also create a trading venue for it. You can only operate a so-called bulletin board. And how does Timeless solve it? They have a so-called trading window. I think every 4 weeks, the trading window opens, and then everybody who wants to buy or sell something can, within this trading volume of a couple of hours, sell or purchase his ownership stakes. That's okay. It's okay, but it's not a liquid market, right? It's not such that the investor can buy or sell shares at any time he wants to, as he or she is known from brokerage companies. Yeah, it's just not perfect yet.
Why do you need a prospectus to be able to have an exchange? Because all of the kind of crypto assets out there don't have prospectuses and they trade on exchanges.
So why do you have to have a security prospectus? Because crypto exchanges are also there, and they also do liquid trading. Yes, it's true. But the point is that right here we are in the capital market domain of digital securities. That's basically the left side, and all the crypto assets are on the right side. That's basically two entirely different sets of assets, and they are not interlinked with each other. So you have digital security, digital assets, by the word, it's a very shaky word because digital assets is basically everything. But digital securities in European context is regulated by the MiFID regulation. That's the left-hand side. Huge business, billions of trading volume. And then you have the crypto assets with the MiCA regulation on the right-hand side. And this doesn't touch each other. Yeah, so
all of these examples.
Yes, exactly. To some degree, yes, if they are large enough. But you see here, shares are shares, and shares cannot be crypto assets. So they are automatically not in the MiCA domain anymore. And by the way, that's an interesting question because companies are always trying to work around the security side of business because the regulation are much, much, much higher than the crypto assets regulation. Right? Like a crypto exchange like Binance is not as strongly regulated like Deutsche Börse operating financial market. So companies try to be always in the blockchain side of assets, not in the digital security side for regulatory reasons. And this now also gets a little bit dangerous because The question is how the US regulator will decide what all these tokens are. You know, what is Ethereum? Is it decentral, then it goes in this bucket, or is it maybe having an issuer, then it goes in this bucket? What about KuCoin tokens and Binance tokens and these tokens and that tokens? It will be very exciting the next couple of months whether the regulator in the US decides it this way or another way, because what happens when tokens which have been sorted into this category are now recategorized into this category? What happens? Crypto exchanges have to delist these tokens. What happens to the value? Decreases significantly. So therefore, in case you want to talk about the remaining risks of crypto markets, that's one of the key remaining risks. How is the US regulator deciding on all these tokens? Luckily, the US regulator has already decided for Bitcoin and told us that Bitcoin is decentral, so Bitcoin is automatically in this domain, you know, the crypto asset domain. But other tokens which have been issued is questionable where the regulator will put them. This will be exciting in the next couple of months. Okay, back to Timeless. Timeless basically is doing such collectibles. You know, that's basically fan goods. Yeah, this might be a Nike shoe, a Puma shoe from your favorite sports guy, and you would like to have an ownership stake in this shoe, and it costs you 50 euro. Yeah, that's basically celebrity goods, I would call it. It's a small capital market, yes, but basically it's celebrity goods. It also started and it works quite well. And now it gets exciting because I show you one company which started not even 1 month ago. Company is called Hardstocks, and they have tokenized one traditional car with equity tokens, such that you can create a security prospectus for it, and then subsequently European Union passporting. And they also have created a liquid market, 24/7 liquidity on the market, because with traditional cars or vintage cars, you can estimate a rough price such that the market maker can act in the market. Yeah, because the expectations for the price discovery can be shrunken to like a price of 1.9 million plus minus 10%. Yeah, that's quite clear. And how does it look like? They have started mid of October. They have tokenized this vintage car here on the left-hand side. Value is 1.8 million, and you can purchase one share of this car for 18 euro. Full prospectus, equity, and liquid market. And I think this can really be a game changer, because now the investor can not just invest, he can also divest at any point because the market is liquid. That's very interesting. And how did they make the equity stuff working? They used Liechtenstein share companies, which is equity. They used the Liechtenstein blockchain framework to tokenize the shares of the Liechtenstein entity. They moved over the car into the Liechtenstein entity such that it's owned by the Liechtenstein entity. Then they created and tokenized the shares to avoid the notary. Then they asked the Liechtenstein FMA, as a financial market authority, to get a prospectus for this share. And because Liechtenstein, unless differently like Switzerland, is in the Europe, it's not a European Union, it's basically some other economic area, there was the possibility to use the Liechtenstein prospectus and get EU passporting for it by the German BaFin, such that you have the sales permission for Germany. You get it, you know, this was a very, very, very long sentence pointing towards a hell lot of complexity, but they basically import Liechtenstein shares company with this passporting regime to sell equity tokens indirectly to Germany. It's very interesting. And this, with inflation going on, could be a game changer to tokenization. Let's see what happens. But you see here, technology progresses year by year. Solutions are getting better here and there. And therefore, at some point of time, one company will solve it. And then it's ready for scale. Yeah, they could have found like a good combination of all these parameters concerning tokenization.